Volatility is back, and it led to one of the biggest sell-offs we've ever seen in tech stocks in terms of market capitalization. But the inflation figures were really bringing in rotation across the board. A broadening of the market is not necessarily a bad thing, and it led to the Russell 2000 having the best day versus the Qs since 2001. In today's video, we break down whether the equal weight can start to move in the right direction, and more importantly, why some of the markets that we expected to absolutely go ballistic certainly did, including gold, and the weaknesses through some of the others, including Bitcoin. We've got some amazing levels coming up in today's show. Join us as we cover stocks, commodities, and cryptos together, including a pretty rare signal called the Hindenburg Omen. Is it actually going to be bad for us though? Let's look at it all right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we're discussing everything from the macro to the data to the key levels that we need to be watching. It's clear that it was a rotation day. While the rest of the market did really well, big tech stocks got sold off across the board. And we've got more of why that happened coming up in today's show. If it's your first time here, remember to subscribe and smash that bell icon. It's great to have you. All right, well, let's begin with the inflation figures. Now, this is a Bank of America report from Mike Zaccardi over on X. And you can see that if you pause the video here, in general, they're pretty upbeat on it, basically saying that things are crossing down across the board and things obviously improved when it comes to some of the sticky components of inflation. Now, CPI month on month might have been down to 0.3, which is the first read we've had there for quite some time. But basically, I think there are still some problems. Food away from home did surge up, while food at home surged only a little bit. Now, the good news is food at home is more important, weighted at around 8+% in comparison to 5.4%. But I would expect this to continue to have a problem, especially with restaurants. And I think those stocks may continue to struggle over the next coming years. So be careful in that particular sector. Where we did see some big growth, though, was ITB. The home builders market absolutely went ballistic on the news of potentially a rate cut getting priced in. And as you'll see, according to the market, we are very close to a rate cut in September, at least with the expectations out there at the moment. This led to clean energy, gold, regional banks, solar, IBB, biotech, and many others starting to improve. And I've got to say, there were some really good signs. Not only did gold do exceptionally well, but biotech's actually been looking fantastic for a couple of sessions now. So it just shows that price action often can lead into these big movements. And we've got some good ones coming up when we look at the charts later on as well, in terms of possible breakouts occurring right now, even in markets outside of the US. Let's now take a look at the VIX futures term structure. We've got an updated chart here, and you'll notice that it looks like we're starting to go into volatility early. Now, the markets, of course, expected July into August to see an uptick, and then things to really accelerate through September to October. And if you know your stats, you'll know that you usually get 2 pullbacks a year. So is this the beginning of a pullback just due to the rotation? Basically, the big tech stocks will drop off, and then the smaller caps will come up, which is great for broadening, but it may not be enough to hold the markets, of course, up in the major indices. Well, of course, it all usually kicks off very, very quickly, with 2020 actually going to a crescendo around September. And now that we're in the middle of July into earnings season, it's probably going to be pretty volatile for many stocks out there. Here's another way of looking at it, the VIX seasonality across the board. You'll notice that in general years, it's actually more August that starts this off. And we're looking for the signs, of course, across the board. One of the good ones here is something I shared over on X, and basically it shows you the S&P 500 average single stock volatility upside, which is going pretty ballistic right now versus the indices. And what this is suggesting is that a lot of people are playing a couple of stocks in particular. And this makes sense, of course. We know that semiconductor stocks, tech stocks, they've got all of the interest on them at the moment. And this is leading into single calls becoming very different to the index calls across the board. First time we've had this in a while, and it did actually happen a few times back in 2023 as well. And when we actually got a huge rise in this upside implied vol, we ended up having that sell-off through the back end of 2023. So it's something to watch. And of course, we'll continue to look at puts and calls and seeing how the direction is looking on the options market. When we look at rate expectations, it looks like there's a 93% chance of a Fed cut in September. I'd be interested to know your comments down below. Do you think there's going to be a Fed cut in September? Of course, the stats are saying yes, there will be. And the number of rate cuts this year has gone from 1.5 to 2. Straight after that CPI report came out, you can see a huge movement in the expectations. Now, we mentioned before that the Russell 2000 just had its best day versus the Qs since 2001. Now, that's a pretty bullish breadth thrust. And in many ways, if you think about it, IWM did start to break out of some serious levels. If it can get a weekly close that we'll look at later on today's charts, that will be incredibly significant to see the actual start of a proper rotation. Many people have been kind of thinking about this. Obviously, memes have been coming out about how bad the Russell's been going. So could it be it's time to shine? Well, this is a chart that kind of shows you why it might be that time. This is the equal weighted market trailing PE forward versus the S&P 500 market cap. Now we're trading at 24.4, which is historically pretty high, as you can see here on the charts, on the normal market cap. Whereas the equal weighted market's trading at 17.7, well down from where we were back in 2020/21, and of course, well down still from where we were even in 2017. Now, if this starts to improve, could it easily get to 20 times ratio? Absolutely. And that would be a decent uptick in things like the RSP. So that's a chart that we'll want to be watching together, especially this earnings season. As you can see here, the expectations are starting to pick up in terms of what Wall Street is looking for into 2025. And it is still expected to be a pretty good growth trajectory. You can see here earnings estimates coming in at 2025. It's predicting that this chart here would be at 274 versus where it is right now. So that's a pretty good upside. And we've already talked about how the market's starting to price in anywhere from 10 to 15% year-on-year growth from the indices. So that's the S&P 500. Now, on the negative side of things, the Hindenburg Omen. I've seen this chart flowing around the internet a little bit, and Grant Hawkridge over here has confirmed it a few days ago, saying that we got the first Hindenburg Omen. Now, a lot of people make a big deal about this. They say, wow, the Hindenburg Omen is definitely a big sign of bearishness. I think you'll be able to tell on this chart that it has huge amounts of false reads. So like anything, sometimes you have to use it with other stuff. Now, if we get like, let's say, an uninversion of the yield curve, so that is the US 3-month or US 2Y versus the US 10Y uninverting, and we've got tons of Hindenburg readings, because it tends to be not just one Hindenburg reading. Notice that you really want more of these heavy multiple read sessions. If that ends up coming through, then you'll want to be paying attention to it. But just because you hear it, it says Omen, it sounds scary, I wouldn't be too scared of that particular one. Bull markets, of course, are built on quiet strength. Now, one of these things is that we want to see more advances across the board. Now, we mentioned that even before the inflation figures came out, we started to see the rumblings of a turn. Now, I mentioned this in our weekend video, if you want to go check it out, and we talked about how the metals market in particular was actually starting to uptick. You also saw it in recent days before this occurred in things like solar and biotech as well. So it's funny how the market kind of shows you through price action that there are improvements, similar to how we picked Tesla the other day, AMD and Intel. All of those were also showing rumblings of turn. So remember, the price action is the most important, and the sentiment in general, in terms of the storyline, that usually comes after already the smartest people have already got into these positions. Let's have a look here at this chart from Grant Hawkridge talking about moving averages and the direction. And the financials are very, very good at the moment coming into their earnings season. Percentage of stocks above the 200, very high. And of course, the percentage of stocks above the 50 has gone into the green. Also, real estate sector also showing some signs of incredible improvement. Now, this is a good broadening of what I would call the debt market. Basically, it is people borrowing money. Now, you might say on the first thing, that is terrible. Everyone's living on credit. Yes, that is late cycle for you guys. Basically, this is what you have to expect. Debt is starting to balloon. People are being able to borrow more debt. We have $0 down deposits on houses starting to come through. We also have double mortgages starting to come through in the US. All of these things are signs of a late economy cycle. And it does usually lead into growth. and it leads into a very dangerous time. Now, of course, this will be over usually a 1 to 2 year period, but we've got to be watching this together because I can tell you that while gains might be fantastic, there are reasons as well, strong reasons why gold, and of course on this channel we've been talking about gold to 3,000 for quite some time, is an important investment, an important thing to watch, because gold is not just moving on stagflation or cutting of rates, it's moving on powerful undercurrents of central banking systems. Let's talk about the big earnings coming. Of course, it's the kickoff of the banks. Do not forget that things like Wells Fargo are expected to move, according to the options market, 6 to 7%. We will be covering off. Make sure that when you're doing earnings season, because there's going to be so many opportunities, a lot of the time it's better to have patience, wait till the earnings comes out, and then grab the opportunities as they occur. This is a good chart from the weekend, and I just thought I'd kind of mention it again here, and you'll notice that it's what we've been talking about for a while. Especially gold miners, the stocks are well behind gold spot. So as gold spot has improved, guess what? The miners have been doing even better. And we'd expect that to pick up even more. As you can see here, the prime book is starting to move into these basic materials again, leading into CPI. And even though CPI might have shown coolness, it didn't really affect it that much. Other than copper going down, we still saw a lot of the metals markets, in particular gold and silver, start to improve. And of course, there are reasons why gold and silver were going to do well in both cases. Cutting the rates, gold often does well. Stagflation, gold often does well. It's kind of like a win-win in terms of that market. Secular bull markets do tend to last for a long time. We've talked a little bit today about late cycles and debt systems. And of course, we expect that there's going to be the chance of a further run leading into the election, more volatility coming through, and of course, hopefully some decent pullbacks. We are expecting a second one this year sometime over the next 3 to 4 months, so we'll be on the lookout for that. Could this be the catalyst? Well, it may be. Of course, semiconductors we've expected to slow down, but here's what happened over the last 24 hours. Semis weakened hugely. We saw staples also declining, which means the defensives weren't exactly what was leading the market, and anything that kind of doesn't make money was out in front, though home builders do, I guess, make some money. Then we also had metals market here and gold doing very, very nicely indeed, including utilities picking up across the board. And that takes us to a 5-day total where out of nowhere, home builders came out with an 8.57%, which is very strong. And really, I think regional banks leading into this earnings having such a good period of time, that is a good sign for overall the bulls. So let's have a look now at the delta. Of course, delta ended up being positive on the day, even though there was a big red candle. And if we get rid of that chart, you'll notice here, it looks like a bearish engulfing candle. So we had a feeling that we're starting to get into topping markets. Of course, these stop signs, both on the weekly closes and the daily closes, tell me that it's time to be cautious on the indices and look for rotation. And this could lead us into possibly markets pulling back a little bit more. Let's have a look at the futures market here. The 1-day expected options move low, by the way, was perfect. So it came straight back down to where you'd expect initial buyers on the very small times to try to get in. There is also now a new expected move from potentially the options market. Remember, this is where the market will stay 68% of the time, all the way down here in this more major kind of support level. So we've got first support here around 55.78. Maybe some buyers try to buy the dip. Does look like a little temporary turn here though. So let's say we came back up to a 61.8 fib. I would expect possible shorting to actually occur on the smaller timeframes, mostly led by big tech stocks. So as we see rotation starting to pick up maybe here in small caps, the big tech stocks, I don't know if they're going to be so resilient to just see absolute V-shaped returns. Higher timeframes, wouldn't be worried. Of course, trend is still very, very bullish. So this is the first level, this is the second level, and to really get a full bearish kind of bust, you're going to unfortunately need quite a lot more for a lot of people out there, which is all the way down at 54.40, 54.50. So market's still quite bullish. It's just 1 day off, but it was an important session because if we go back here and we mark out the actual percentage here from the open to the close, we got so close to actually having that 1% down day, which has been a long time. We actually technically didn't manage it. Even through that session. Let's now have a look at the futures market and the options, and you'll notice here the options were the ones getting wild. 55.50, something we just mentioned, puts all over that for Friday. Calls all over the 5600 zone. So of course we closed at 55.85, So this basically points towards markets coming down, finding maybe some supports around 55.50. If it gets underneath 55.50, for it to turn into a negative gamma situation and actually then start to push the 5,500 narrative. So there's a lot going on here in the options market onto Friday. I think indices could be very wild in terms of the overall options moves if they manage to get out of the 55.50, 5,600 narrative area. If they stay in here, then of course it's just going to all expire worthless. So remember, there's a positive gamma and a negative gamma situation, but things switch to negative gamma on the short times pretty quickly here. 5,600 again being the huge call wall now, and 55.50 again being a very important zone on the options market leading into next week and Monday. On the overall July expiration, you'll still see huge amounts of calls across. So it's going to be, let's see what the 0DTEs do. Let's see how the market wants to react here. Look for rotation into other single stocks and sectors, and even some amazing metals out there. And then really reassess it probably come Friday close. Let's move over to gold, and you'll see here CTAs continued to buy gold. They certainly did because they had a great session. Brent saw an uptick, which we expected around this zone. So of course, is 1 day delayed. So that's what we expected. And copper actually saw some selling. And this was of course before the CPI number, which has pushed copper lower on expectations demand may be weakening. Let's move over now to NVDA. Now this actually ended up getting hit really back down. So 134, we know had a decent amount of calls on it. It rallied a bit through 132 this week, and then it shot straight back down. We've long suggested that semiconductors, after selling off about 3 weeks ago, they were in this type of market, what we call a pit, a pullback in time. And that seems to be coming true for semis. Does it mean it's the end of the bull run? I suggest that it probably isn't based on our analysis here over at FX Evolution. But of course, we're always maintaining watching the market in clear fashion. It's back at 127. That means it's underneath that positive gamma situation for the close. And it doesn't tend to suggest that semiconductors are going to see, a new all-time high in the next couple of weeks. And that's because semiconductors are in their weakest time. It's going to be earnings related to push us through, which is, we've already shown the term structure, which we looked at only, I think, 2 videos ago. Let's now move over to Tesla, because we know the stats are good when we have 9 days up in a row, as we saw with that Optima stat. That tends to lead into further bullishness for Tesla. Now, Tesla had its first sell-off, which is fine, that's expected, and it came back down to 240. Now, the reason was, again, delays on autonomous robo-taxi things. I don't know if that even matters. I mean, it's not probably a surprise in this market. But 240, what an important price. You'll notice the spot price closed at 240. Why? 241, 240, it's where all the puts are. The puts are all sitting here. This is now the put wall. I would expect the market to try to hold this level for Friday. So for bulls, this will be a very important time to watch on the markets. And I don't think necessarily Tesla's done just yet, but it's going to need to hold that 240 for the close. Let's move over to central bank liquidity. Both of them improved, funnily enough, even though the market's obviously declined. And we saw PCC, put call ratio, actually drop off, suggesting that the dip was being purchased by call buyers out there more than actually puts, which is very interesting. It shows you how aggressive the overall market is towards just going bull, 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 bull. ITB home builders, beautiful uptick here. Obviously, that's the type of thing that you want to see if you're a bull on markets over the longer term for the next 6 months, 12 months, 18 months. This is a good first sign of strength, and you want to see those home builders doing well. Dollar index, first bull support found, closed below this area, now bearish. And of course, we found resistance where we expected it earlier on this week. Let's move over to gold. Beautiful hit, guys. 24.20 achieved for the day traders. I got to say, gold was fantastic. Beautiful move over the last week where we saw breakouts here. We suspected there would be a buyer around this point. The buyer came in. 23.80 was cleaned before the CPI number, and that led to a small pullback into a huge rally up to this point. And that was a really nice move. And if it can close up here, let's have a look at the weekly here. If it can close, let's say, above 24.40 in the next 24 hours, it's going to be a huge bit of news for gold. And of course, if we look at silver as well, it's really strong on these markets Both of these look fantastic. GDX stock, Newmont, Barrick, anything you look at, all of the gold stocks blitzing it and having another great session. So as we suspected, this was the flow, and it doesn't look like it's weakened just yet, even with gold hitting its first target. Now, what about copper? So in the previous video, we talked about these two candles. Of course, dojis. We expected resistance here at 470-ish, and we need to clean that level to really show a full metal movement across the board. This is weak at the moment. It looks like we've now gone underneath the 20 moving average, which, yeah, is a bit surprising. We probably would have liked to have seen more buy pressure there. We're coming back to the 61.8 fib. We're going to keep watching copper like a hawk because it's important to see how it does react to this next kind of 2 trading sessions. So we'll keep watching copper, but gold benefiting from, of course, the rate cuts. Now, also US oil doing pretty well. Where we expected a watch reaction here for the bulls did occur. We actually got a very replicable trade. This one is straight out of our day trading masterclass. If you ever want to find out more about how to do this type of trade, fantastic trade, already up almost a 2-to-1 on ratio here. And yeah, you can check it out at fxevolution.com. But beautiful, nice bullish hammer here. It seems to be trying to go for it and move on the way up. And of course, we need to clear 84 a barrel. I've got to say, oil, gold, really nice trading over the last 2 to 3 weeks. Now let's move over to energy stocks because they've been a little bit more disappointing. Now we had a possible turn, which we're talking about scale-ins here, and we were looking for a sign of strength. I think this is an early sign of strength, which some people are going to be looking at from a scale perspective on markets. So an early sign of strength here for the energy stock market. Certainly something we'll be watching. Now we move over to Tesla. Let's have a look at it on the weekly. That'd be pretty nasty weekly, wouldn't it? A big shooting start to the downside. We know what's kind of happened when we've seen these. But you know what I would do? I'd also mark out the high if we do end up closing above that, if that's how the weekly closes. If we get above that, I honestly think we'd go past 300 at that point. So it would be epic. And I think the closure of the next session, as we know, 240, very important point. If it keeps weakening under 240, that could push a negative narrative and we go lower, we'll have to reassess that. But at this stage, Tesla still has some bullish components to it. Of course, people are still bullish, and 240 does have a huge amount of puts on it. So one to watch for Friday. AMD, Intel, all those others that ended up hitting profits, again, they're all just floating around the TP zone number 1. And if we do get a breakout, now we can mark out this high here, which is 188-ish. If we get that, then we could be going to the second TP zone of 207. So still some great trades, and it just shows you technicals do hold up in these markets. Great areas to be maybe scaling back or even taking profit. Now, this is the one that was interesting. Semiconductors versus SPY, monster engulf to the negative side. I'm really looking at the weekly close here. If it closes like this and then flows through into next week, it suggests further rotation out of semiconductors and looking for that all-important move, guys, back to the weekly mean reversion. Does that mean we're in a bear market? No. Is that what we've seen a lot of in recent times? Absolutely. And of course, semiconductor traders, I'm sure, will be salivating if it comes down there because they'll be like, yes, I can finally get some cheaper semis. Same thing on NVDA. Surprised to see it not kind of go towards the 140 straight away and then sell off. But yes, we do expect, as we've said several times, chopping and possibly a little bit of decline on this, then followed by ideally bullishness later on. I think NVIDIA is still a fantastic stock, one of our 3 favorites. Now let's move over to some exciting breakouts. Got this alert as we were recording, actually, because of course the Chinese market's open. 700, 10 cent, boom. There it goes. Great stock, looking very good. Let's see how the close works on the daily. And HSI, we had our suspicions over the last 24 hours. A beautiful day here, 1.86%, kind of solidifying, I think, that some swing traders will be activating positions on these types of things. Coming off the 61.8 fib, could China be back? It's had big moves on Baidu, big moves on, of course, the HSI, and 10 cent breaking out for the first time. So some exciting stuff going on in those markets. For the Qs, it wasn't all bad. I mean, yes, we know we're at a point of pause. We know that we're at a point of what I would say is caution in markets, just because that's important if you're an investor or a longer term trader. Of course, it's not really a big worry because it's been doing so well, and it is still in an upward trend. So let's move over to the two markets that everybody's talking about. And of course, one of them has to be the US 2000, breaking through the 2100 barrier and at the moment still trading up in after hours trade. So can this do it? A weekly close above 2120. This is a huge zone. And as we know, we suspect that this could bring in as high as 2250 over the next couple of weeks if we manage to do it. Clearly, the big thing here is going to be watching IWM, the ETF, making sure that this weekly close is higher than the last and holding above this watch reaction here level that we've got on the charts. Another one that everyone's watching will be RSP because, of course, we want to see this also hold a new weekly high. These zones will matter and rotation is starting to get pretty fierce. Let's move over to the importance of the closure for things like Ethereum. You can see here the rejection coming off that watch reaction here zone. You'll notice that it gets higher than the supply, then fails at that level. And same thing happened on Bitcoin. Now, I love Bitcoin right now because if this ends up going bullish, wow. First bull turn zone, a close above here. Whoa, that's going to be a really big deal from a TA perspective if you're playing your stats. Bull swing zone as well. It may look terrible on a chart, and it does because that's basically a tweezer short. And don't get me wrong, it's a series of lower lows and lower highs right now. But I love these types of setups because now the patience game plays out really big time. Excited to look at this chart with you guys on the weekend after we see another close. But now, though, of course, the bears are in control, and maybe even we can get that 51.5, 51.8 zone. What news is ahead? Well, we've got PPI coming out, and that is going to be an interesting read. And of course, if you want to check out more about what we do over at FX Evolution, maybe have a look at our courses, find out how you can replicate some of these setups, and of course, follow us over on X. You can do so there. Thanks so much, guys. Remember, subscribe, smash that like button, and have a great Friday. CPI starting to look a little bit better, but really, this was a day of rotation. And to summarize it, I guess the best way, it was a day of recognizing that price action was already leading a lot of these moves. And of course, I'd like to think that we picked up on that in the metals, and in some of the things I've been talking about recently, we also saw it in the bios. Price action is king. We'll see you in the next one.